As a AAA-rated country, Luxembourg's foundation of stability has long earned the trust of investors, businesses, and global institutions. Yet stability is not an end in itself. It is a platform for growth, innovation, and future generations. As a trusted partner in safeguarding and growing wealth, and a stable base of operations for global financial institutions, Luxembourg is enhancing its role in global finance, driving cross-border investment and fostering a competitive business environment. By connecting stability with opportunity, Luxembourg continues to be a place where talent, ideas, and capital converge to shape the future.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Hello, and thank you for joining us. It's wonderful to have such an international audience with us today, and it underlines just how truly global the realities that we will be discussing truly are. And what's also striking is how many of you are from the field of compliance and risk management, an area that is not only complex and technical, but also highly strategic. And that strategy matters not only for the firms that you represent, but also for the many stakeholders that rely on you. Over the next hour, we will see just how vital your role is in ensuring the stability and the security of the global financial system. Because, let's be honest, the world financial institutions operate in today is more unpredictable than ever. Regulations are multiplying across jurisdictions, while businesses and markets are more hyper-connected and hyper-concentrated than at any point in history. A single event, true or fake, whether political, technological, or financial, can now send shockwaves around the globe within moments. And on top of that, we are drowning in a flood of headlines and data. Every day brings new risks, new announcements, and new information, and the real challenge isn't just in keeping up, it's working out what truly matters and what is just noise. And that's exactly what today is about. From ESG disclosures and the AI Act to transparency rules like AMLD6 and DAC8 to resilience frameworks such as DORA, the maps of compliance and risk management are being totally redrawn. And the key question is, how can firms not only adapt but also operationalize these changes? Today we will start with a fireside chat on navigating geopolitical risk, and then we will move to a panel on the new compliance frontiers in 2025, before closing with a discussion on operational risk management in a hyper-connected world. But before we begin, we owe a very special thanks to the RegTech firm Aptus AI, our sponsor, for helping make this event possible. So with that, it's now my great pleasure to welcome Andrew McDougall, Managing Director of Geopolitical Risk at Barclays, to set the stage with our first discussion. Andrew, thanks so much for joining me. Andrew, your title is fascinating, but it's also a little bit intriguing. Could you walk us through what your role entails in practice?
Yeah, thanks very much. Yeah, it's quite a unique role to have at a bank, but I'm notionally group head of geopolitical risk at Barclays. What does that really mean? Well, I've got two aspects to it. I've got an internal job ensuring or briefing our group chairman, his board, group CEO, and his leadership to ensure they have a better understanding about how global events, global issues impact markets, strategy, risk, and our clients. I also have a second job at the bank in a way, doing the same thing with key clients. Now, it's geopolitical risk, but actually my title is a little bit misleading. It probably should be geopolitics or global affairs because it's not all risk, it's risk and opportunity. And in a way, it's how we adapt or how we use that, how we adapt to these global issues is probably the number one in my title.
Well, it's very impressive, and it's also setting the stage now. When we look at the bigger picture, there are many analysts that are comparing the geopolitical risk levels today with the period of the Cold War. Do you agree with that assessment, and what does it mean for financial institutions?
Yeah, I mean, it's certainly equivalent to the Cold War, but it is different. In the Cold War, in a way, we kind of knew the two sides, we kind of knew the pressures and the influences. Now the world has fundamentally shifted. And I'm going back to, in fact, my first answer. It's not all bad. It's becoming much more difficult to adapt, understand, and then for a financial services institution to actually then implement that. And what does it actually mean? And that could cover everything from sanctions to currencies to rates to jurisdictions to regulation. So there's a whole remit. So in effect, it is probably much worse than the Cold War because it is much more difficult to adapt and then really identify those risks or mitigate those risks and identify those opportunities.
Yes, and in that environment that you just described, we are also flooded with headlines every day. How do you separate what truly matters and what is probably just noise?
Yeah, and noise, that's the key word. There's just so much. There's just too much noise. And in fact, I think what it really means is it's like, you won't get your strategic understanding or views from a 24-hour news cycle. You have to really have some in-depth knowledge and understanding of various issues, risks, or jurisdictions, regions, and then really set in place rigorous risk management processes around those risks and opportunities that we've identified or those global events potentially. And that really then cuts through the noise because then you're just, almost you have a better understanding of what's coming, and you could do that with a whole list of dates or bureaucratic processes. Take China and the Politburo, for example. Having a real understanding about how that functions, works, is really indicative of what we're trying to achieve. So almost keep the noise to one side and really concentrate on our risk management processes.
Yeah. And then alongside the cutting through the noise, there is also a question of timing, I guess, or a challenge of timing. You have to balance the immediate shocks, and then also you have to build somehow the resilience for the long term. How do you achieve that balance?
Yeah, I mean, we don't have a crystal ball. Shocks will continue. And I think that the number one issue is as long as we, and this is not just my bank, but it's any financial services institution or any corporation, in effect, is really understanding everyone's role, understanding what happens if there is a shock, who leads, who's at the meetings, what are the decisions that need to be made. But by the time we even get to there, the shock will come from an area that we're either in or our clients are in. So in effect, we will have a better understanding across the businesses and across the functions, risk, compliance, legal, etc. So actually having I know it's bureaucratic, but it's very important to just have those processes. So when the shock comes, you're much better prepared.
Yeah, and can you maybe talk a little bit more on how you bring that geopolitical risk into the broader enterprise risk model once that understanding has been achieved?
Yeah, and I think I'm lucky in my job, and I think it might be unique for my type of role that I work to our leadership. I work to the group CEO, the group chief risk officer, the board risk committee, and all our entities. And in effect, we should have a better, more consistent understanding of what's coming and how these events might impact us. So how does that actually fit into the enterprise risk management model? Well, in fact, all the chief risk officers, all the key risk officers within the bank will actually be on my calls, will understand what we're thinking, how we're viewing some of these issues. And that way, yes, sure, geopolitical risk is not a principal risk, but what it does do is actually is the overarching influence on all those other principal financial risks and non-financial risks.
Now, some of these financial institutions are so global that they almost carry the entire world within them. I'm thinking of different markets, different cultures, different regulatory frameworks. How do you manage all this? Can you keep this aligned, and how do you avoid being pulled in conflicting directions?
Yeah, that's a really good question. We're not a homogenous bank. We've, exactly that. We're in a lot of jurisdictions globally, regions, and yeah, everyone will have their different views, cultures, and influenced by local or regional politics. So, in effect, what I need to do, and I do this. I speak to them. I travel regularly and relentlessly to some of these regions and speak to them, try and understand their points of view without actually going against the values and principles of the bank and the leadership, and actually our wider views of a region. And I'm very particular. I really want to be as objective as possible. I don't want to bring in kind of my political views or anyone else's. It's how does the bank react to this? So it's very objective, pragmatic, and we've got those processes in place. So actually, yes, it's great that we have that diversity, but as long as it doesn't sway some of our decision makings unnecessarily.
Mm-hmm. Well, finally, if you had to pick one geopolitical risk that maybe many risk managers underestimate today, what would it be?
I mean, this is a really difficult one because there's not just one. But if I would pick one, it's and it's not really. It certainly should be number one on everyone's risk and opportunity radars. But the US-China relationship is not well understood, and the direct and indirect impacts of that over the short and medium terms, I think, is the knowledge or understanding of that is lacking in some areas. So that shock, in a way, or that geopolitical issue is something I think we certainly hear a lot about. It's certainly on the news cycle. It's on the news cycle today. China-US talks in Madrid, doing a TikTok deal, etc. It's actually something that we really need to understand better. What is the Chinese objectives? What are the US objectives? And how does that impact advanced tech supply chains, global supply chains, investments, de-dollarization? The list could go on. So I think that is very broad, but it's the one risk I think we should really, that is underestimated.
And actually, I would even allow you maybe to pick a second one. Are there any risks in our own backyard we should be mindful of?
Yeah, certainly. I mean, Europe has, again, I'm glass half full. I think certainly the fiscal stimulus out of Germany and Brussels is a real opportunity, but there are some major risks, and it's around political polarization, the strength of the European Commission and the EU in and of itself, and then the indirect and direct impacts from other events, that US-China relationship, as I mentioned, that will impact Europe. Russia-Ukraine certainly will impact us on commodities, energy security in particular, which we should understand, and then advanced tech investment into the EU, and I would add the UK to this as well. And there is an overarching issue on defense spending. Can Europe afford 5%, or European NATO members 5% spend on defense? Really difficult to see when economic growth is not as strong as we would like. But glass half full, a lot of stimulus in place. Let's see where we get to in the next 12 months.
Excellent. Thank you so much, Andrew, for joining us. I think you have given us an excellent introduction for the other panels that will further or look into the compliance and risk management angles. You've also pointed out that it's not only about reacting elsewhere or about what happens elsewhere, but also about what happens in our own environment and also maybe in that own backyard. So as we have also heard, geopolitics doesn't exist in a vacuum, and it's also closely linked to compliance. And that also makes our next discussion timely. It's now time for me to hand over to Anne-Lise Vandevoir, Counsell at Clifford Chance. Anne-Lise, the floor is yours.
Thank you very much, Lynn, for the kind introduction. And good morning. Welcome to today's first panel, which will all be about compliance and how financial institutions are navigating the current European regulatory framework, as well as how they are preparing for the months ahead in 2026 and beyond. I am joined by a very experienced panel today. We have Sandrine Labro, Managing Director and Chief Compliance Officer at BPH, Karine Laurencin, Deputy CEO and Conducting Officer, Compliance, Risk and Legal at Amundi, Luxembourg, Alexandra Merlino, Head of EU Regulatory Affairs at Pictet Group, and Murielle Yimgang, Chief Compliance Officer at Generali, Luxembourg. For the next 25 minutes, we will walk you through the main compliance regulatory topics on top of the priority list for financial institutions in Europe. To start off the panel with an opening question to each and every one of you, if you could name one significant compliance challenge or opportunity for the months ahead, what would that be? Starting off with you, Karine.
Well, from the asset management perspective, I would say that sustainable finance and technology would transform our industry in the coming years. On sustainable finance, the challenge would be to maintain this ESG integrity, navigate in the complexity of the regulation, cope with the transparency requirements, and as well, and it is the most important risk, is to manage the greenwashing risk. On the technology side, I would say the business is transforming quite rapidly, and compliance will have to accompany and upgrade their skills to accompany business effectively, and they will likely play a key role in the governance of AI, so that they ensure that AI is used in a fair and transparent manner without any bias, and to ensure that we cope with, to comply with regulation.
And Murielle, maybe from an insurance perspective.
So in life insurance, I will say that one of the biggest challenges will be the building and a strong operational resilience in a fast-changing environment. And DORA is a good example because even though the framework is already in force, we have upcoming requirements such as incident notification, reporting to regulator, ICT risk management, and third-party oversight. So DORA is not just about IT. I think that I would say that is about introducing resilience in the DNA of the financial institution.
And Sandrine, over to you.
Thanks. Anne-Lise, so the biggest challenge and opportunity are the pace and the speed of changes, while we're supposed to go through a period of regulatory burden reduction and simplification. I'm sure most of the people here would agree we don't feel like it. I would say the fast-evolving international sanction regime remains a challenge for the industry, and AMLA would be an opportunity to harmonize our respective AML/CFT sanction program processes. So in a way, compliance is shifting from a cost center into strategic enablers.
And Alexandra, finishing with you.
Yeah, I was thinking of an issue that actually straddles across the banking and the asset management sector, and I'm thinking most precisely to the transposition of the quote last piece of the banking package. So we have done CRR3, now governments are working on the draft law on transposing CRD6, and within that space there are some items relevant to a third country business that are relevant both for custodians and asset managers. For custodians because it relates to the business of custody in a third country, and for asset managers, although indirectly, there are some inconsistencies, or shall we say, contradictions with the UCITS and IFD regime, for example, in the event of wanting to grant overdrafts to funds in the settlement at T+1 of US equities. This is definitely something we will look at very closely this fall.
Thank you. And we will dive into each of those topics. First one being the new European AML landscape. So as most of you know, 3 legislative core instruments have been introduced. 1 regulation, which will be directly applicable, a single rule book applicable everywhere in all member states. Another one introducing for the first time a European AML authority, and then finally a 6th AML directive that will cover the institutional AML systems national competent authorities will need to comply with. Sandrine, you have been preparing for this new package. What are the main compliance considerations you are anticipating?
Thanks, Anne-Lise. So if you allow me to recap where we stand with AMLA and across the industry. So early June, the industry did give some significant feedback, either directly or through the different fund and banking association across the EU to EBA, especially on the CDD RTS. Then the revised draft is due to go from the EBA to the EU Commission by end of September. For the EU Commission to then feed back to AMLA towards end of this year, early 2026. And then from there, we expect AMLA to finalize a rule book by mid of 2026 at the latest. Now, obviously, we know that there's a new AML annual data collection that will be triggered by AMLA starting in 2027 for data as of end of December 2026. So while we may have more than 3 months to complete in 2027. And then some entities, about 40, would be directly supervised by AMLA. So the list would normally be published towards early 2027. So back to your question. Sorry, Anne-Lise, I thought it was important just to recap in terms of chronology and expectation. I would say that the main operational consideration as of now is what we know would be one, a consideration of our respective AML/CFT sanction program and processes, especially in terms of due diligence on our bank client or on investors in funds. And 2, very important, 2, the digitalization of KYC information. And especially, we would have to consider some system fix as well to address it, so both on the bank client and on the investor side for onboarding. And I think depending on which country the audience is in, so some of us are used to a very thorough annual data collection from our respective regulators. Some others have got less, some others have got none. So I would strongly recommend the audience to obviously have a look at Annex 1 of the RTS that gives some details about the expected data we'll have to share with priority to geographical tab. Because from our own experience, it is one of the most complicated to obviously pull together and as well to review. Now, I'll take this opportunity as well to invite the audience to continue being very engaged at the local level through either fund or bank association with different authority. One, obviously, to try to influence, 2, to get very familiar with what the expectations are going to be, and 3, to be in a better place to start prepping. I think we can all benefit from each other's expertise. So I'll finish on that, Anne-Lise.
Thank you.
Thank you.
And staying maybe on the AML sanction programs, Alexandra, we have seen with the geopolitical tensions currently, how can financial institutions adapt to the ever-changing sanction regimes?
Yeah, indeed. Tough challenge indeed, Anne-Lise. I think echoing what has been discussed at the fireside chat with Andrew McDougall, I think the hashtag geopolitical risk will likely hit a record in 2025 on the networks. I mean, this is obviously the topic of the day. And also echoing what was said earlier, I would definitely recommend firms to focus on separating what really matters from what is just noise. And what I'm saying here is that, as you clearly highlighted, this is an ever-changing, very regulatory-heavy moment to be in, the sanctions, the AML, the new European authority. So the response to your question, in short, is threefold. Is to stay agile, to be focused, and to be resilient. When I say stay agile, I mean that us as a firm, we rely on digital compliance for the caseload, the bulk of these sort of, I want to say, bread and butter cases. And then on the second piece of my answer is the focus the resources on the difficult cases. So in that sense, really concentrate on the very many nitty-gritty details that concentrate on a limited part of the population. Hopefully that's the case for most of us. And third, last but not least, as was mentioned, resilience. So as this AML sanction package keeps on evolving and spreading bigger and bigger, staying resilient with the team and basically being aware of the changing and staying on top of regulation also with the help of the stakeholders, the government and the associations. That would be my short answer.
Thank you. And are you able, within your organization, to navigate really the sometimes daily sanction regime changes? How are your AML programs, are they set up to manage this type of risk?
They are indeed. I mean, we are now getting at almost the 19th sanction package. This is happening. You know, it's being cooked up as we speak, I think. And you know, by the 9th version of the package, I think we're all pretty much aware of the fact that regulatory watch is key in this space. And when I say regulatory watch, I really mean doing the watch together with the business. So corporate function working really closely with front office staff on very specific client cases, whether in the retail space or the asset management space, but staying close and not having sort of like ivory tower, which is something none of us can no longer afford anyway in this environment. So I would definitely recommend staying close to the front. Crystallize material cases on an internal repository that is shared, making sure that the priorities are clear and documented internally so that there are not fixes or last-minute sort of cases that one has to deal in a sort of like unorganized fashion. You would want to avoid that for sure in our business. Escalate, obviously, very quickly to governance and to senior management. Get help, get their attention and support for difficult or sort of like sensitive decision. And last but not least, once again, echoing what you were just saying, being sure that we calibrate our effort and our response in the IML space, but more broadly in the regulatory watch space with the help of local associations so that we know that we can really finesse our message and our efforts to the level of expectations that is required locally where we are active.
Mm-hmm. And Sandrine, anything to conclude on this topic?
Well, I would reiterate what Alexandra just explained and what Andrew did during the introduction. So I think agility is key. I think partnership with the business lines are key, including immediate escalation. I mean, sanctions are taken very seriously, both within companies and at the regulatory level. I would say that from an industry standpoint, we would welcome more alignment between OFAC and EU programs, especially that in terms of names, in terms of timing of release, in terms of interpretation, way of dispatching the list. And this would obviously help streamlining screening, for sure. And then the reporting process too, as well as eventually reducing the complexity of licensing rules and jurisdictional arbitrage of the sanction actors.
Thank you. And now going to our second topic of this panel, all about outsourcing and delegation. So this is something at European Union and local level has been a strong focus on, and one of the main compliance requirements is to be able to build really a strong and robust oversight framework. Murielle, you have been working on this. Are there any practical consideration or good practices you would like to share today?
I think that outsourcing has been a major challenge for years, because we're working with many service providers and the work keeps evolving. The regulator is very demanding and require strong governance and continuous monitoring. And for us as insurers, the main challenge will be to ensure that critical function and activities remain under control while delegated. And for example, with the CAA circular 2216 and 2115 are very important because they set clear rules for delegation of critical activities. So I think that to resume, I can say that the regulator, for us is the CAA, expect that insurers maintain a strong full oversight on delegated function and activities performed through due diligence over service providers, and also to ensure that subdelegation is explicitly approved and continuously monitored. So the key takeaway for me is that we can delegate tasks or work, but not the responsibility.
Mm-hmm. And Sandrine, maybe thinking also about the DORA rules that have been applicable now since almost a year, and ICT outsourcing, critical ICT outsourcing, do you have any preliminary feedback to share on those?
So I think just to come back to a point Murielle just made, I think the industry and long-term investors have benefited from obviously intellectual property skills and access to the global service model, which is key. I think in the recent time, and not specifically in Luxembourg, we can note some friction and some, people refraining from letting that global model continue to evolve. I would say in Luxembourg we have a very strong and mature regulatory framework that enable us to, in fact, delegate with, obviously, of course, appropriate oversight by the different parties. When we go into DORA now, Luxembourg has adjusted to the DORA regulation. So for any DORA entities, if you already have an ICT who is on your DORA register and you're just changing from on-prem into cloud, you don't need to submit any notification to the CSSF. If now you're about to appoint a brand new ICT for critical or important function, then you need to go through the notification process. But it's, let's say, it's a simplification of the process that was in place before, so that's very welcome.
And now over to innovation. So a lot of companies in the financial sector accelerate their development of AI tools and digitalization of services, sometimes also with tech solutions that can help reduce some of the regulatory burden. Alexandra, you have been looking at this as well. Do you have any practical take to share there?
Yeah, sure. I mean, obviously AI is the name of the game as well, very topical. I would say that digitalization is a prerequisite for financial services firm. This is something we have to embrace, and if the audience hasn't thought about it, that obviously we're running late here. AI is an opportunity. It is something that we are closely looking into. Basically, it's a tool to make our lives easier. We already have some AI learning models that are crunching data for our investment teams. So we use them to help us making investment decisions and to go through standardized formats of data that are readily available so that investment advisors can save time on those specific topics. And these particular models are developed in-house. We have a own internal innovation team, which we are really proud of, and you know, we obviously look to them with I would say admiration for someone who doesn't necessarily has a massive IT background, but also with very high level of expectation. So management looks to them also to make the business more fluid, more efficient, and definitely being a source of efficiency in that sense. So we definitely use them in the investment space, and we also have a legal team and data protection colleagues on top of specific issues to avoid any particular friction on the edges on data secrecy and client information, obviously, which is something we feel very strong about.
And Sandrine, do your operation, are they set up in the same manner, or?
Yes, I would say very similar. And like, you know, quoting a famous industry speaker on AI is simply putting obviously traditional parameters into a new piece of technology. So different technology, machine learning, large language models, agentic AI, and so on and so forth. And as such, the traditional compliance value are still valid, which is all about data protection, data governance, ethical use, pre-approval and oversight of use case. So, for example, you know, none of that should be new to anyone, even if it's now to be applied to any AI model. So within BBH, for example, very similar to Alexandra, we have set up a dedicated AI committee. We have an AI Center of Excellence who are obviously experimenting some low and high impact POCs, which is very useful, whether it's for the first line, second line, or third line. And then the third point, which is very key, is education. So educating people on what it means, how it can be used, what can be done, and what are the parameters, and obviously the governance around it to obviously comply to.
Mm-hmm. And Murielle, do you have maybe some examples to give to the audience on tech solutions that you are adopting internally to make things easier in terms of regulatory compliance?
For us, we use AI mainly for dashboard, data analysis, and reporting. So as for the other player, it helps us save time. But the key challenge is data protection, because many AI tools use cloud storage and has ensured we are bound strict by the professional secrecy under Article 300 of the insurance law. So we have to be very carefully on where data goes and how they are secure. But we also have an innovation teams which were created since I think 2 years or maybe more. And we also have the security IT who is very present to educate all the people about this topic.
Thank you. And then more innovative, even some institutions rely on blockchain technology to support their regulatory compliance, for example, with AML KYC, or even to tokenize financial assets. And Amundi has been looking at this trend. Do you have any experience to share there, and maybe legal compliance topics that need to be kept in mind when experiencing with blockchain?
Yeah, sure. Well, fund tokenization is one of the key strategic trends of the asset management industry. So it's still at early stage. It's just embraced by small actors. However, it's growing fast, and a growing number of actors is testing, exploring the technology, partnering with fintech. So it's a lot of test phases here, but it's not widespread across the industry. So two considerations maybe from a compliance perspective. One is AML. AML, we talked a bit earlier, but here with the blockchain, it has a different picture. The blockchain, as you know, investors use pseudonym, so there is a challenge also to verify the identity of the investor. We have also to set conditions to authorize the secondary markets, so the transfer of token from investors to investor. AML is not only the KYC, it's also the ongoing monitoring. So it's the ability on the blockchain or to screen investors, ability to filter transaction on a real-time basis, ability to freeze the wallet, because we are talking about wallet in the blockchain. So it's a complete new AML process to redesign and to look at very carefully from the compliance perspective. The second topic is the technology. It increases a lot the cybersecurity risk. The use of blockchain, public blockchain especially, and smart contracts are an attractive targets for cyber attacks, theft, fraud. So the management of the wallet, the private keys are critical in the process, and we have to set up new procedure in case of stolen key, lost key, etc. So it's totally a new process with cybersecurity risk, operational risk as well. So even if it's very exciting for the asset management industry with a huge potential, it opens a large landscape of compliance risk that we have to deal with.
And probably still some questions as well. For the last topic of today, DAC 8, provisions that will become applicable in Luxembourg as of 1st of January 2026. Maybe Alexandra, they have some impact on service providers in the crypto asset space. Could you tell us a bit more?
Yeah, sure. And we remain in this fantastic digital world that's opening, as you mentioned, for us plenty of opportunities and potential challenges. So DAC 8 provides for transparency and detailed due diligence and reporting on operators in the crypto asset space. So which services are concerned? The list is actually quite long. You could be an administrator, you could be a custodian, you could be a portfolio manager that has crypto units in your portfolio. So all of these actors are concerned by DAC 8. And what is the purpose of the regulation is to bring or to increase the information or the level of information of tax authorities on these particular transactions, so that the taxman knows where is the money coming from and where it's going to, obviously, and how to tax it properly. So hopefully with DAC 8 we'll have a bit more clarity on these flows and on the very many challenges that there are in actually identifying properly the transactions and identifying the donneurs d'ordre, the executors, and the whole chain of relationships. So definitely something to look into.
Mm-hmm. And DAC 8 also has an impact on the insurance sector, Murielle.
Yes, completely. In life insurance, DAC 8 will extend the cross-border tax transparency reporting. So the challenge will be to adapt our system and processes to ensure accurate reporting while respecting the professional secrecy. So this will require a close coordination between distributors and partners. So, trust rejection. So in the long run, we can say that DAC 8 is not just about reporting. It's an opportunity to reinforce the credibility of Luxembourg as a transparent and trusted hub.
Thank you. And to close off this panel, maybe with you, Karine, when you taking a step back and looking at the years ahead, do you think regulation will get simpler, more harmonized, or will it get more complicated and diverge even more? What do you think?
Good question. well, the omnibus package, for example, on sustainable finance is a good example of the regulator initiative to simplify rules, harmonize rules, and to also simplify the life of the industry and to take into account the issues that the industry is facing. So it's, for example, adding some delay in the production of some reports so that the asset manager has more time to verify the data. It's also to recognize the data accessibility. When there's some issue, they can offer some flexibility. So it will not necessarily simplify the overall compliance burden. That's we won't say that. However, it takes, we can say that there's a willingness, and it's a good signal for the industry. There's a willingness to simplify rules, to have a more workable framework for the industry. And the idea is to stimulate innovation and EU competitiveness. So I would say, to answer the question, I would not expect more regulation nor less regulation, but maybe a better regulation, a smarter regulation.
Thank you, and thank you everyone for listening in. Thank you to each and every one of you. I will now hand over to Michael Horvath, partner at PwC, to moderate the panel on operational risk management in a hyper-connected world.
Thank you very much, Anne-Lise, and welcome everybody. We're changing a little bit the lens that we have now. We are looking at a quite big topic. It's about a hyper-connected world and operational risk within that. Now, if you think back a little bit, after the big financial crisis, last 15 years, we have seen tremendous growth in the financial services industry. With all that growth, of course, comes a couple of factors that you cannot negate. If you want to grow, you need to work with business partners. And of course, specifically from a Luxembourg point of view, that means delegation to make sure efficiency is within the operating system, but as well, obviously, from a technology and ICT service provider perspective. Now, to be able to decipher a little bit what we're talking about today, I'm very happy to welcome and introduce my panelists of today. First, Antoine Meyers, I would like to welcome you. You're the Chief Information Security Officer for BNP Paribas, more than 20 years of experience in the financial services industry, and obviously mostly looking after cyber risk these days. Welcome. To the left of you, we have Dr. Neuberg. He is the chairman of the board of ALRIM, that's the Luxembourg Association for Risk Management, so an ideal panelist for today. Luc, you have been working in the fund industry. You have been working specifically on risk management for the last 25 years. Last but not least, we have to the left of me, we have Tilo Reichert. He is the head of risk and compliance with Swiss Life Asset Managers in Luxembourg and has kind of a dual hat. So it's going to be very interesting to see how the different views will also lead us through the topic today. Now, gentlemen, without any further ado, let's jump into the first question, which again, as you know, panelists and moderators, they take it easy. In one sentence, Luc.
A hyper-connected world means a substantial increase in the scope of operational risk management and therefore a complexity of the system and the entity we have to control. Two angles must be considered. What is coming in the system, meaning the remote access, intentional or unintentional, and what is out of the companies, meaning outsourcing. In other words, what is in, what is out. The more connected a system is, the more complex and the greater the surface that need to be controlled and to be protected.
Thank you very much. Antoine, with your words, what does it mean for you, hyperconnection, operational risk?
On the IT and the cybersecurity side, an hyper-connected world is characterized by a certain number of key actors which are used by a lot of the financial entities. Just to name a few, Microsoft, Oracle, Bloomberg are used all over the place. It's cost efficient. You are having the best skills to provide you the service, but also it increases the risk. If they are under attack, if they fail, it's not only you, it's the whole system who is failing. So we are really facing this sort of increased dependencies on the IT and the cyber side.
Domino effect.
Domino effect, indeed.
Tilo?
Yeah, Michael, I fully share the view of Luc and Antoine on increased complexity for operation risk, which is obviously due to the dense web of digital interactions that are existing with service providers, with tools, across jurisdictions, which means that also the risk and the impact is amplified in case you have cyber attacks, in case you have leakages or failure of third parties. What does it mean? It means effectively that risk management needs to step up and really becomes more proactive and also tech-enabled. And how is that done? Well, that also depends on the support of the boards and the C-level of the companies that need to fully embrace the need and support that.
So we have different angles to consider here. That's also something we will unpack a little bit now together. Now, Tilo, as I alluded to at the top, obviously Luxembourg, when we look at that, the second biggest fund industry within the world, which means we are very much focused on delegation to make sure we're efficient. Now, if we take a step back in Luxembourg a couple of years ago already, the CSSF has introduced specific requirements how you need to tackle more or less a business delegate. Now, when we look at the European level with AFMD2 now coming up, very, very similar requirements actually enter into force. Can we say there are any lessons to be learned from Luxembourg for Europe on this topic, delegation, operational risk?
I mean, let's face it. Delegation has been, or is in the DNA of the Luxembourg fund industry. I think it has been one of the backbones for the success. Obviously, giving the access to global expertise, to operational and technology capabilities that are clearly outside of Luxembourg. At the same time, you're achieving economy of scales in the sense that you can offer services in a cheaper manner while keeping a flexible business model. What the Luxembourg regulator has done, and you're right, years ago, they have established a robust and now mature delegation framework that ensures that those benefits can be taken care of, while at the same time the risks are being addressed. So the lack of direct access, the lack of potentially the transparency or even the full understanding on what's done. And among others, the CSF has published Circular 1868, the substance circular that is indeed going in that direction. And it's not static. So over time and through periodic reporting and publication to the annual report, feedback reports from thematic reviews, they have further, I would strengthen and clarified the expectation level, but also you can see the evolution so that it's really state of the art. What it comprises is clearly, and there the AFMD familiarity or similarity really kicks in. It's a concept that relies on a formalized process and a well-documented process when it comes to initial and ongoing and periodic due diligence, as well as an ongoing monitoring. At the same time, it's important for, and in my case, the asset management industry, to identify and manage conflict of interest, and also address exit scenarios so that in case you need to withdraw a mandate, that you have a plan on how to do so. That only works if you also have sufficient expertise and the right workforce to do that delegation oversight. The way I think that forms the pillars, and again, that I think that gives us quite some experience. Delegation of an activity doesn't mean you delegate the responsibility, right? So you need proper oversight. You can apply a risk-based approach by focusing on the more material risks coming from the service or from the delegate. And I think along those lines, we have found quite a good way of having a robust framework in place, having a very proactive regulator. And I think with that, we have created an environment of trust and that fosters the compliance. And that I think is what we can offer. Years of experience in that regard that are on an AFMD2 compliant level.
Yeah, which is interesting. So we might be a step ahead. Obviously, we had a couple of years to go through that. Luc, your views on that, delegation, arrangements, operational risk?
Yeah, for more than 30 years, Luxembourg has been an international financial center working in cooperation with the rest of the world. Virtually no institution were perfectly autonomous. We have an habit to work in international context with different culture, different language, different system that we have to manage. And again, this is not a question of regulation. It was a question of the way we were working in Luxembourg. Regulation is just the result of this. And delegation means also that you keep the responsibility. It's key to remember that you can delegate, but you keep the responsibility. And in other words, if you keep the responsibility, you need the knowledge and you need to be able to understand the risk factors and the business that you outsource. So you need to keep that. We have a fantastic framework. As we already mentioned, we have the 18698 circular, but we have also the circular 22608 for outsourcing. It's pure common sense, but there it's also the proof that in Luxembourg we have that strong habit. One of the key messages in terms of risk management, this is again the expertise that you need to keep and you need to get for the control of outsourcing, for the for that control, for the oversight function. So again, my key message is keep the expertise, know what you control, because you cannot control if you don't understand.
Understood. Thank you very much. So certainly not an easy area to control and to obviously identify and manage risks. For the audience at home, just to making sure we don't have only circulars. In the end, everything is coming together at the European level now. You were referencing another circular from Luxembourg. Now, Antoine, if we look at the 22806, if we look now at the Digital Operation Resilience Act, so for those of you at home maybe who don't know that, that's a big European regulation that entered into force beginning of this year, which is looking at IT risk management, but the core of it, of course, is one is cyber and the other is how do we make sure when we have technology and data all around us the business keeps on running. So, Antoine, the question to you, we move from business delegates into ICT service providers and exit strategies. How do you see that now from a risk perspective?
This is really at the heart of DORA, and I would mention two pillars, the one on third party and the one on incident management. The one on third party is obviously one of the most difficult to put in place and to organize. You must first set up a methodology to analyze your third party, define the way you are going to assess the risk of these outsourcing, or also the risk of purchasing. You buy software from a third party. It's not an outsourcing, but there are new type of risk. So you need to go through all these third parties in your own methodology to be able to assess the risk of these third parties. Once you have done that, the goal is then to monitor the relationship with these third party and on a day-to-day basis, on a quarterly basis, be sure you remain in control, not only on the service they provide, but also on the risk they create, continuity, cyber risk, and clearly, not all third party were willing to enter into this journey, but the whole purpose of DORA was to be able to provide a register of third party to the authorities, to the central bank in Frankfurt, and they are now analyzing this whole mesh, this network of dependencies. And I'm sure that they are really now getting a lot of very useful information, and they will then nominate, if I can say so, the critical third-party provider who will then be the lucky one who will have to be DORA compliant. But we are, as financial entity, really looking forward to that loop to be done. Then on the incident part, that's clearly something that we are usually mastering well. We know how to master incidents, and we have internal procedures. Now the new step is that you have to report in a formalized way to the authorities in 3 phases about the incident. And that's also very interesting from the inside, because you have to be very formal to know, okay, which incident you report and which you do not report based on the regulation. And I'm sure that the authorities now are also looking at this information, seeing, okay, these incidents are coming, caused by these financial entities, but also caused by these third parties. So they have a lot of information about the heart of this regulation, which is control the risk that is created by this hyper-connected world. So really third party and incident management are two key pillars linked to the topic of today.
So we will make sure we have enough to do. Tilo, maybe if you want to comment on that, on DORA.
Sure. I mean, as said, maybe to stating the obvious, it's not just, say, covering additional service providers with the same frame. No, I mean, to me, it has fundamentally shifted the operational risk landscape and the way it's being done, meaning that you need to find new approaches. I mean, DORA is on one hand quite specific in many areas. At the same time, I would say it's sufficiently vague to still leave room for interpretation. What it ultimately does, from my perspective, it extends the risk management framework from process management, business management, risk management, to clearly an IT risk and a security risk management scope. How they're done, and that refers a bit back to what I was saying before, I think it requires a shift in the approach from risk management to more proactive, also tech-enabled way to do things. And that can only obviously succeed if you have the right support on that. Building up on the pillars that Antoine was mentioning, I mean, there's also this comprehensive ICT risk management framework, which needs to be established. That is obviously monitoring the ICT providers, as well as the incident reporting, but also the overarching resilience. At the same time, the providers need to fulfill certain resilience standards and also need to provide reporting back to it. And then you do have a contract component that also needs to have those famous DORA clauses in that cover the first two aspects, as well as also termination rights, dispute resolution in case you go in for non-termination, and other elements, and transition periods, which are quite new and can be quite debatable. I mean, if you put all of that together, risk management plays a role in trying to assess and to oversee it, and also trying to do the risk management work they need to do to be independent consultants to the boards, to C-level. The difficulty in that is obviously you need to upskill. And I think that is the part where, in contrast to what we were saying before, where we have a huge experience, this is new to the industry. And I think that is, at the same time, a challenge, but also an opportunity that together with IT experts that we clearly have in Luxembourg, to form together a robust framework that allows for an upskilling of the risk managers and the overall risk management framework.
Which I think was as well, at least for us, one of the very interesting aspects. We had clients across Europe. Our local regulator was very, very transparent in expectations, in communication with the market. That was certainly one that we felt was one of the more helpful things when we compared a little bit across Europe. All the others were rather mum. BaFin came up a little bit later. But CSF was very consistent on this is what needs to be done, this is where we need to go. I think that's also probably another aspect of that. Now, gentlemen, you have said at a couple of different instances now already. You have also mentioned it at the top. We have a lot inflow, we have a lot of outflow. Antoine, you have mentioned now before, obviously, we have a lot more providers that we need to look at from a different point of view. You have mentioned the incident, you have mentioned this as well. So we have information and information and information. We need to produce reporting. So all sorts of different angles. When we maybe think about that, and that might be a concept to consider, information overload as an operational risk. Luc, maybe the word to you. How do you see that?
Yes, from my point of view, the main risk is losing the essence of the business. Noise in place of real information. What is information? Essential. What is noise? It becomes really difficult to concentrate on those tsunami of information coming from every channel. And data flow has become a screen that makes things more complex. We were talking about complexity and therefore instability of the system. The essence, we need to come back to the essence. Regarding the regulation, regulation may really the result of the behavior of the players. So it's a constraint for sure, but this is also, and we have to remember that the regulation is there forced by bad behavior. And therefore, if we change our behavior more essential, the regulation will be not forced to impose such requirements. So it becomes more and more difficult because people are working in silo view without an holistic point of view, which is essential. My favorite question is, what are you doing? Coming back on in out. What do you need to provide your output? Coming back again to the essence of the business. And with that flow of information, data, and also the regulation driven by the behavior of the player, it becomes really difficult.
Mm-hmm. Understood. Now, Antoine, might be a little bit of a tricky question because you sit in the middle of this. Huh? On the one hand side, you see an additional information flow that is coming to you as a CISO because we need to open up under DORA a little bit more. But then, of course, on the other hand, there is an outflow from your position as well because you said it before, Tilo, there's a different risk awareness also at management level around. So how do you see that from your position and within your organization or the market of more information might also be a risk?
Yeah, indeed, we have an overflow of information now that we have these DORA quite strict requirements on the risk management. We have the risk, excuse me, from the third party piling up. So you need really to have a complete system for you to understand the real risk that, excuse me, that you have. You have different level of risk, you categorize them, but are they really similar? Do they have the same consequences? That becomes fairly difficult once you have a larger universe of risk. On top of this, there is the compliance risk. The regulation is more and more complex. You are not compliant from day one. And being compliant is the priority number one. But on the other hand, if you have cyber risk, if you have IT risk, how do you balance risk of a completely different nature, being compliant, being legally okay, or you're fighting against cyber threats? So really, what I see as a CISO, it becomes really difficult now that you have a very organized systems with flow of information about different sources of risk to define your priorities in a very efficient way. And that's where the human knowledge is coming in. You need to have the, excuse me, the human understanding to make the right choices.
So thank you very much for that breadcrumb. The human knowledge is key in all of that. Skills are key in all of that. Retraining, rehiring, changing the profiles. Maybe, Antoine, we take you as a second on one, that your voice gets a little bit back. Look, I mean, it's a risk panel. We are in 2025. We see the leaps that generative AI is doing on all sorts of fields. We need to talk about this. No, as short as possible, obviously. When you think about AI being as a disruptor, and I know AI, that's a conversation you can have for days. But if we think about this as a potential disruptor, or it's an enabler of resilience, where are you seeing AI reshaping operational risk, reshaping business? Maybe look, if we can start with you.
AI is there, it's a fact, it's a tools. You have no expert system without experts, coming back on the knowledge. My main topic on the AI, it's fantastic, that's true, but it's like nuclear power. Well used, it's fantastic, badly used, it's catastrophic. We need the control, and you will never replace the experience, expertise, or human knowledge. Okay, human intelligence is there. If it smells bad, if it looks like bad, it's bad. AI should be used because it can manage system and like no brain can do, but we need absolutely to keep the control. With another risk, this is the exogenous manipulation. So if we do keep the control, if we do understand, it's perfect.
Thank you very much. That's very interesting. Antoine, what's your view on that?
On the cybersecurity side, we have always the attacker side and the defender side. And if we look at AI, it's really the attacker who benefit from it now. perfectly crafted phishing emails, writing malwares, finding vulnerabilities. They have been very clever in using this AI to be attacking us, attacking the financial entities in a more efficient way. On the internal side, I think we still need to master what we can do. We have some products coming on the market, but I would say it's for the moment still unbalanced between attacker and defender.
Understood. Thank you. Tilo?
Yeah, I mean, I don't disagree. It's changing the battlefield. I mean, that's clear. However, I'm a bit more optimistic on what it can do and what it will do. To me, AI will be a cornerstone of operational risk management in the future. It will allow us to deal with more data, maybe also to allow for get rid of some of the noise that is there. It will allow us to do more predictive analysis, to do exit simulation elements that can really help to provide information that was not there. So it requires efforts. It requires, I would say, I fully agree with Luc. It requires the human intelligence component. But if both go hand in hand, and I think we see first positive outcomes of that, indeed, I think it can really increase efficiency and also effectiveness at the same time. Mm-hmm. And that, I think, is to me, a very optimistic way for the future. Mm-hmm. We just need to follow suit.
Yeah. And that's in the end, we're in the middle of a huge transformation. I think we probably can agree on that, wherever we will go from here. The interesting part as well, just maybe to conclude on that, is obviously Luxembourg has recognized there is digital transformation to be done. And obviously there also with our investment tax credit, that's what we see a lot in the projects. You know, the market players are just incentivized to try to move forward, also obviously from a risk management perspective. So thank you very much to you, to the panelists. It was a pleasure with you discussing this topic. Although I guess we all agree it's not an easy one on that, so very much appreciated. Thank you very much. Thank you. Thank you. So with that, thank you very much for all of you who have joined us today, who have watched this. Clearly for us, Luxembourg is, because we have been all of you have heard it 25 years, 20 years, 20 years. So it is a place to be for us. We have done a lot on delegation. We have obviously done a lot now on ICT service provider. And again, we would just welcome you as well. Maybe you stop by one or the other time for coffee with us. We would be very much appreciative of that. With that, I would hand over to Lynn. Thank you very much for taking the time today.
Thank you very much, Michael. And with that, we have come already to the end of our live stream. I hope today's discussions have given you fresh perspectives on how to manage the known and the unknown challenges that we are sometimes facing, and also leaving you better equipped for the future. Because building resilience is not only just about rules and frameworks, it's also about how we, as professionals, stay agile in an uncertain environment and also turn that into our strength, the strength of our firms, and also the strength of the many stakeholders who rely on us. Now, I would like to thank again you for watching, our speakers for engaging in very thoughtful discussions, and also our sponsor, Aptus AI. Our next digital event, Focus on Investing, will take place on the 22nd of October, so mark that in your calendars. Until then, thank you for watching and goodbye.